you with us today. My name is Silvana, and I will be your moderator for today's webinar, Unlocking Investment Opportunities in the Western Balkans. This is a very important topic for all companies and investors that are looking at Southeast Europe and seeking some practical guidance on how to enter and how to operate in the region successfully. Before Nina starts with her presentation, let me just say a few words about Unia ETL. Unia is an international group offering accounting, payroll, consulting, and IT solutions with regional and international experience. Unia supports businesses in dealing with local regulations, tax, and other compliances matters. And I believe all our colleagues have many practical aspects and knowledge of the market entry. That is exactly why today's topic is important to us, because successful investment decisions require not only seeking the opportunity, but also understanding the framework behind it. Now it's my pleasure to welcome our Nina, Regional Business Director of Unia ETL Consulting, who will be guide us through today's topic and share her expert views on investment opportunities in the Western Balkans. Before we begin, just a few technical notes. Please keep your microphone muted. If you have any questions during the webinar, please feel free to write them in the chat, and we will be doing our best to answer them afterwards. If we do not get through all the questions, Nina will be available for follow-up after the webinar, as all our colleagues. We are joined by them today, and they are from across the region. So if you have any questions related to a specific country, there will be someone here to support you. Nina, now over to you.
Okay. Thank you so much, Silvana, for this kind introduction. I hope you can hear me well. Welcome to today's webinar on our topic regarding looking into opportunities to invest in the Western Balkans. Our focus today will be mainly on the following countries. So on Slovenia, Croatia, Serbia, Bosnia and Herzegovina, Montenegro, and North Macedonia. Together with me today are also my colleagues from these countries. They're all tax legal advisors, colleagues who help companies establish and expand in a particular country, and to see whether there are specific, let's say, opportunities to cooperate and expand in this region. So you are very much welcome to contact them directly if you have any specific questions related to specific countries. Otherwise, of course, my contact also is available here and also on the last slide. So we are definitely available for any specific questions you might have, maybe later on after this webinar. So the idea for this webinar came to us in last year. And we decided to make it in English so that we can present this region, the countries that I mentioned, because they are becoming increasingly popular in terms of investment, in terms of establishing new companies, in terms of broader and abroad, let's say, cooperation. So why Western Balkans now? Because this region is being extensively supported by different incentives, by different tax opportunities, and also we have been seeing that there has been quite a lot of foreign direct investment inflows in the last few years, and are expected to continue in the future years. As you will see during the presentation, these 6 countries all provide qualified workforce, a big talent pool, so definitely a lot of IT engineers, technicians, production. I can say from my experience that the level of English language is at an extremely high level. So these are definitely great and qualified workers here. There is also this proximity to different foreign markets, given the geographic location of this area. All of these countries are also interesting from a tax perspective and from cost efficiency perspective. There are a lot of different IP boxes, different tax reliefs that are available in all of the countries. You will see in the later slides what these advantages are. Also, the countries which are not in the European Union offer industry zones. So establishment of the company in an industry zone may provide these companies with different tax advantages. Also, these countries also have a very good infrastructure. Also, new infrastructure is being built every day. Also, they are very interesting from their geographical position in terms of logistics. They are somewhat related to Central Europe and also to the East and the West. Otherwise, all of these countries also provide different hubs for digital transformation for startups. They offer growth for startup ecosystems and provide different incentives. Also, it is known that the countries Bosnia and Herzegovina, Serbia, Montenegro, and North Macedonia are all pending EU status, which means that in the future we can expect some kind of regulatory alliance or compliance with the EU legislation. When we consult with the clients regarding this different countries, we can already see that some of the legislation in these countries is already being adjusted, or at least taking into account some of the solutions that are being made forward by the European Union. So we can definitely see that there will be some alignment already now and some in the future. Also, we can, of course, let you know about all of the subsidies, all of the different investment structures that are available in each particular country to bring in investments. I believe that all of these governments of these countries are all very much invested into getting new investors in their countries, respectively. So they all offer some kind of relief or some kind of incentive. So when we're discussing the possibilities to enter one particular country, we of course have to look at this market and make an entry and an exit strategy. So when we're looking at the market entry strategy, of course, it is advisable to look at investment structure. It is advisable to look at regulatory, legal framework, to see the taxes, to check potential costs, and of course, always plan for exit. It is our understanding in practice that a lot of companies, a lot of businesses do the first three, let's say, but do not expect the exit planning. And then we have potential issues, or we have to find some solutions for each of the countries. So it is really advisable to also start looking at the exit planning, especially if we're looking at a startup. So if we're looking at this region that we mentioned, Western Balkans, there are, let's say, 6 types of market entry strategies that we can look upon, and we will briefly look at each of the strategies. Of course, each strategy is different, has its pluses, it has pros and cons, and of course depends on on the company's goals, on the company's plans for the future, and maybe their already presence in some of the countries. So first of all, we can see greenfield investment, meaning we are establishing a new company. There is no company already established in this market. We are not present already there. We are providing a new company with new employees. We are building a new business entity, brand presence, searching for buyers, for partners, and so on. And usually, so the most common form for providing or doing greenfield investment is to establish a limited liability company. All of the countries provide also for different types of companies, such as public company, or let's say private entrepreneurs, institutes, foundations, and so on. But mostly common for establishing a new company is a limited liability company. Often countries offer different incentives, tax benefits for newly established companies. So it would be wise to look into this. The second option to expand in this region is through acquisition, so through merger and acquisition. It is also a good option if we already have a partner in this region, or maybe if we have let's say a buyer, or someone who is supplying us, who is buying from us, a distributor, and we are now looking into expanding in a particular country. One of the possibilities is also to buy already existing companies and expanding through cooperation or through actual merger. So this allows us to access the market a little bit faster. But of course, it would be very advisable to search for these particular companies which are appropriate for us, which also provide potential synergies for the future. And of course, before such a process, merger and acquisition, we have to follow the usual M&A steps. So preparing letter of intent, and of course, performing legal, tax, regulatory due diligence, financial due diligence, so that we can check if this investment is the right one for us. The third option is joint venture or some kind of strategic partnership option. This doesn't necessarily mean that you have to establish a company in a particular country. It merely provides a solution to have a collaboration. So this can be through establishing a new company in a particular country, or it can be through contractual relationship with a strategic partner. Also, for this purpose, sometimes together with partners, we establish new companies, such as special purpose vehicles to perform certain operations, to perform certain businesses. And of course, this allows us to enter the market maybe sometimes in a quicker manner. Also, the pro is that we can share investment, we can share the risk, we can share best practices, what not to do, and of course, expertise. So know-how is combined, and therefore better chances for future growth. So this is definitely something that is more common in a more regulated or relationship-driven sectors. We at Unia ETL offer our clients also this possibility to help them find potential strategic partnerships to make it easier for you to enter these markets. The fourth possibility is distribution or agency agreements. So it is not necessary, as I mentioned, to open a company in one of these countries, but to establish agency agreements, agents, distributors via very, very good structured cooperation agreement, distribution agreements, agency agreements. This, of course, offers a more contractual obligatory relationship, however, doesn't necessarily provide all of the benefits that a new company or a separate company may, because you may not sometimes be eligible for certain incentives or certain tax reliefs that may be offered to the newly established companies. The fifth possibility is opening a branch, representative offices. So, of course, not necessarily that these companies establish subsidiaries, daughter companies, but they can establish branches. So branches is generally not a legal entity. It is just prolonged business operation in a particular country. It can provide full operations, can also allow for direct operations under the parent company, but with the local presence, which sometimes is a better starting point for doing business. Especially in certain sectors, it is better to have local presence. Also, an interesting intermediate step when we're not really decided if we want to establish a company in a particular country yet. Maybe just the last one to mention, okay, in all of these countries, it is also possible to have public-private partnerships or to get concessions. Of course, definitely depends on the sector, on the type of business we're doing, especially common in infrastructure, in energy, in utilities, meaning long-term contracts with governments or municipalities. Definitely one of the possibilities. So whether you're looking into one or the other, I think that we can definitely support you with all of the required steps. Now we will look at a brief presentation of each of the countries, so all of the 6 countries, just so that you get a little bit of insight. Slovenia is not the smallest of the 6, but one of the smallest. It has about 2 million people. GDP growth is about 2%, inflation currently 2.9, unemployment rate 4.1, and the euro is the current currency. Why Slovenia? So maybe when you're searching for or deciding on which country to use, not only taking into account the costs and taxes, which you will see later, maybe just to start also from in terms of what we are doing, what our business operations include. So Slovenia business environment focuses mainly on manufacturing and industry, on IT, high tech, pharma, logistics, transport, tourism, green technologies, finance and business services. What are the pros? It is definitely one of the countries inside EU, so we have EU-aligned regulations, strong IP protection. Our taxation in Slovenia also provides for great tax benefits in terms of R&D, IP box, higher labor costs, a little bit more higher than other countries, and the proximity to Central Europe. If we look at Croatia, Croatia is a little bit bigger with a little more inhabitants of about 3.8 million. GDP growth and inflation both are a little bit above 3%. Employment rate also about 5%, and the currency is also now euro, which makes it easier to do business in certain cases. The focus in Croatia is mainly on tourism, maritime business operations, marines, and so on, transport, logistics, construction, real estate, also agriculture and food processing, pharmaceuticals and chemicals, and also IT hubs. Croatia also is part of the European Union and is also attractive for tax regimes, especially for growing foreign direct investments. It is relatively easy to do business there, and there is also this proximity to Central Europe. If we look at Serbia, this is the biggest country of the 6. It has about 6.6 million inhabitants, with about 2% GDP growth and 3.8% inflation as of now. Unemployment rate is a little bit higher, which provides for a new or let's say possible workforce for establishing in case of establishing a company. The currency is not euro, but it's Serbian dinar. Focus in Serbia, I would say, is manufacturing, automotive and electrical industries, agriculture, food processing, also IT, energy, renewables, pharmaceuticals, and also provides for R&D tax incentives and R&D development. Serbia is not yet in the EU. It is in the process from 2012. One of the biggest positives in Serbia is also the free zones. Currently, about 15 free zones which are approved by the Brussels, meaning that for the companies established in these free zones, there are some reliefs regarding the value-added taxes. The Serbian country also provides for a lot of foreign investment incentives, competitive labor, and other business costs. Location is very attractive. Also has free trade agreements with not only with EU but also with other surrounding countries like Albania, Bosnia and Herzegovina, Moldova, Montenegro, North Macedonia, Kosovo, and also with Turkey and Russia. So Serbia is definitely interesting if you're looking to expand in all of the surrounding countries as well. If we look at Bosnia and Herzegovina, it has about 3.5 million inhabitants, 2.4 GDP growth, inflation is about 4%, and a little bit higher unemployment rate of 12%. The currency is marka, so it is not euro. Why Bosnia is interesting? Because it also is in the process of joining the European Union. It is a candidate for the last three and a half years. It has competitive labor costs, attractive taxation system, lower business costs, skilled workforce. Inside Bosnia, you will find several entities which have different legislation systems and each have a little bit specific taxation system, as you will see later on. And both actually are very, very interesting from a cost perspective. Focus in Bosnia and Herzegovina is actually energy, hydropower, coal, manufacturing, metal, wood, textile industries, agriculture, green energy, tourism, and also construction and infrastructure. And given these specialties, also the workforce is mostly educated and has capabilities regarding these sectors. If we look at Montenegro, in terms of population, this is the smallest country. It has about 0.6 million people. GDP growth and inflation both are about 3.2, 3.3%. Unemployment rate of about 10%. Currency euro, which is interesting given that this country is not part of European Union. However, it already adopted euro a few decades ago, so it really has a long-standing, stable financial system. It also provides for strategic investments and projects. All of the main, let's say, investment projects are basically on the coastline and related to this. Competitive labor costs, lower business costs. It focuses similarly like Croatia to tourism, maritime, energetics, construction, also agriculture and fruit processing. So wine, cheeses, olive oil, and so on. So it's really an interesting country as well. And last but not least, North Macedonia, also one of the smallest countries of the six. It has about 1.8 million inhabitants with 3.2, 3.4 GDP growth and inflation, and also a relatively higher unemployment rate currently, so about 12%. The currency used in North Macedonia is a Makedonski denar. Why North Macedonia? Pending EU process, technological industrial zones, similarly like in Serbia, competitive labor costs, ease of doing business, and also focuses on manufacturing, agriculture, IT and business services, tourism, textile industries. So definitely also one of the interesting countries. So when we look at the taxation system, the cost system in all of the six countries, we have prepared an estimation and a comparative review of the six countries so that you will be able to have an insight also in this. When we are talking about corporate income taxation, so about taxation on profit made by the companies, we of course have to take into account five, let's say, theoretical questions which have to be answered before we are starting to do business. So this is definitely something that we should review beforehand. So one is tax residency. We have to know that corporate income taxation is applied to tax residents in a particular country. If we have a seat of the company in a particular country, generally this is the general rule to determine tax residency. However, if the management and the majority of decisions of the management are being made in another country, not in the country where it has its registered seat, the tax authorities may find that this company is not tax resident. So please mind to have the seat and the management in the country where we want to have tax residency. The second is the potential to have permanent establishment. Sometimes companies decide not to open companies in a particular country, but to do all of the business from another country. So to perform operations from abroad. Of course, this is nothing problematic. However, if we have, let's say, factories, if we have branches, if we have agents, distributors, employees who are working in a particular country for another, there is a possibility that such a situation can be regarded to have established a permanent establishment. What does this mean? This means that all of the business operations and income, revenue, and profits should be taxed where we have permanent establishment. So even if you are not opening a company in a particular country, it is possible that you can have permanent establishment formed in one of those countries. One of the things to also look at is the source of income. So if we're having company in one country, it is really relevant to check where we will get income revenue for this company, because if we have if we're receiving income from abroad or from specific types of businesses, source of income can be changed and has to be researched at each particular case. Also, do not forget about transfer pricing rules. If you have related companies doing business in different countries and also performing services to each other, these services have to be at prices which are at arm's length principle, in line with this principle, meaning that these prices should be equal to, if I summarize a little bit, to market prices. So if you would like to have such situations, do not forget that we need to prepare studies on transfer pricing. And also, last but not least, is the withholding tax. So when we are doing payments from one country to another for distribution of dividends, interests, royalties, or in certain cases, rents for real estate, or in certain cases also for business and services, withholding tax should be paid and should be checked what the tax rates are and if they can be lowered. I will speak about this withholding taxes a little bit later more. This is just so that we do not forget about the taxation of corporate income tax, what we have to look at before we are opening the companies. Okay, so if we look at the comparison between specific countries, you can see that Slovenia has the highest tax rate at 22%. There is a mark there. Why? Because currently this tax rate is being increased from 19% to 22% to gain a little additional funds for covering the costs of floods from 3 years ago. Generally, this 22% should go back to 19 in 2 years' time. We will see if it will go back, but generally it is temporary. So it is generally 19 or now 22%. In Croatia, we have the regular rate for 18%. For companies who do not exceed its revenues above 1 million euro, the tax rate is 10%. So this is specific situation for smaller companies. In Serbia, we have 15%. In Bosnia, in the federation, there is 10%. Then we have in Montenegro, general rate is 15%, but there is also two possibilities to diminish this rate to 12 or 9%. And a specific situation in Macedonia, the general tax rate for income tax is 10%. However, for companies not exceeding, it's not exact calculation, but let's say 92%, 92,000 euro. So let's say about 100,000 euro. The tax rate is 1% on achieved revenue, not profits, but revenue. So it is really for smaller companies that do not exceed more than 100,000 euro of revenue. If we look at withholding taxes, we can see and we know that withholding taxes are being paid when we are paying dividends, interest, and royalties, but sometimes also for leases and services. So we have to look at each particular country and each particular scenario. If we look at the general tax rates, these are the tax rates for corporate income withholding tax. So when we are doing payments of dividends, interest, royalties to companies, business to business, general tax rates in Slovenia is 15%, but for Slovenia and Croatia, given that they are part of the European Union, there is a European directive on parent subsidiary taxation, which allows for diminishing taxes, withholding taxes to 0% if appropriate tax procedure is followed. In any case, in Croatia, withholding tax rate is 10% for dividends and 15% for interest and royalties. In Serbia, 20%. In Bosnia and Herzegovina is generally tax percent. There is an exemption. In Federation of Bosnia and Herzegovina, there is 5% on dividends. And in Brčko district, 0% on dividends. In Montenegro, the general rate is 15%. And in North Macedonia, again, 10%. However, we shouldn't forget about international conventions on the avoidance of double taxation of income and property, which allow in each particular case to diminish these general rates to lower rates. So to, let's say, 5, 10%, or maybe to 15%, given the contracts and the conventions between each particular states. So from company paying the income and related to the company receiving the income. So in any case, we should check the possibilities to lower the tax rates for withholding taxation. When we look at value-added tax rates, you can see also here the comparison. Croatia currently has the highest tax rate. It is 25%. 25%. But in any case, Slovenia, there is the regular rate 22%, and the lower two rates are 9.5% and 0% for certain specific goods, such as food and so on. In Croatia, we have 25, 13, and 5%. In Serbia, 20 and 10. In Bosnia, 17. Montenegro also has three levels, and also the same in North Macedonia. So basically all of the countries apart from Bosnia recognize different types of services and different types of goods. So definitely when we are doing business in one of these countries, we have to check what the appropriate tax rates are related to the services and the goods that we are providing. If we look at also taxation in terms of personal income tax, so when we're looking at employees and their taxation, we can summate that Slovenia has the highest taxes in this regard, and Montenegro probably has the lowest. So Slovenia, if we look at personal income taxation, maximum tax rate is 50%. This is really for income above 70,000 euro. Generally, average is about 27%. Capital gains for natural persons, for individuals, is 25%. If we look at Croatia, there is about 25 to 35% plus municipal tax on personal income taxation, and also on capital gains, we have 12% plus municipal tax. If we look at Serbia, generally it is 10 to 20%, depending, of course, on the income type. Capital gains, 15%. Bosnia and Herzegovina, personal income tax rates are generally 10%. In Republic of Srpska, this is one part of Bosnia, they have 8% on income of an employee from employment, 13% on income from royalties, equity, capital gains, foreign payments, other income. Montenegro has a very interesting tax rate, so it's progressive. For income up to 700 euro, there is 0% tax, 9% tax if we go up from 700 to approximately 1,000, and for above 1,000 there is 15% tax rate, which is the maximum, and capital gains are taxed also at 15%. North Macedonia has general tax rate of 10% and capital gains for individuals of 15%. I can imagine that this is a lot of information, a lot of numbers, but this is just to get you a general overview of the particular countries. If we look at currently the minimum salaries in one of these countries, Slovenia has just now from this year increased the minimum wage, also Bosnia. In Slovenia, the minimum gross wage currently is about 1,500 euro. And if you can see here, about 2/3 is net income and about 1/3 is social security contributions and taxes. In Croatia, it is about a little bit over 1,000 euro. The ratio here is a little bit different, correlating to the tax rates that I mentioned earlier. In Serbia, this number is about 745 euro. In Bosnia Federation, it's about 825, and in Republika Srpska, it's a little bit lower. And then if we look at Montenegro, the minimum wage is about 650, whereas the taxation is relatively low. So this is just not taxes, but social security contributions. And in North Macedonia, it has also been risen a little bit to 620 euros. So this is the minimum wage in these countries. If we look at average salaries in these countries, we can also see again that Slovenia has the highest number, so it has about 2,800 euro. Again, the ratio is about 1/3 and 2/3. In Croatia, it's about 2,000 euros, so it's, let's say, twice the amount of the minimum wage. In Serbia, 1,300 euro, similar in Bosnia. In Republika Srpska, in Bosnia and Herzegovina, a little bit lower, and similar numbers also in Montenegro and North Macedonia. Okay. So when we are looking again at establishing a company in one of the 6 countries, I would really advise you to start where we started at the beginning. So to define the sector, to define the services that you will be providing, or if you will be providing goods or let's say infrastructure or production. So define the sector and the services that you will be providing. And given the information that you have already seen in the past slides, check which country is maybe more interesting for you. It would be good to determine the structure. So are you going to establish a new company, a subsidiary? Maybe look into mergers and acquisitions. It is always interesting to find the market and to find already existing companies. What we are seeing now in the trends is that a lot of the companies that were being established in the late 90s are now being extensively sold or transformed, or let's say merged with other companies. due to the ownerships and the owners who are slowly going to the let's say retirement. So they're looking now into sales of these companies, and this is definitely something that's really interesting because we already have a setup company with employees, with business structures, and it's an interesting alternative to starting from scratch. The second phase, of course, is planning recruitment, employing, finding the right employees, maybe working together with different agencies to find appropriate employees, and of course, ensure compliance, meaning regulatory compliance, legal compliance, tax compliance, finding the correct accountants, and of course, appropriate financial and other advisors. Check, of course, the taxes, potential business incentives that are provided by each particular country. And not to forget, prepare an exit or repatriation strategy. So meaning if we at some point want to leave particular country, what will be the strategy to transfer employees, business solutions, know-how, IP, and so on back to the start. So back to the parent company, for instance. This is definitely something to take into consideration. Okay, so when we look at the West Balkan countries, Slovenia, Croatia, Serbia, Bosnia and Herzegovina, Montenegro, and North Macedonia, of course, do not forget that there are a lot of investment incentives provided by different countries to these companies that are being established or are now entering these markets. We, of course, can help you find these incentives. They are definitely interesting for growing tech and service sectors. Skilled workforce, as mentioned earlier, they have a long history of this providing these services that we mentioned. So these skills and education is appropriate to these solutions. Infrastructure investments are being made, and of course, pending EU integration processes, which are to be resolved in the future. So definitely Unia ETL has the possibility to support you with the operations, with the openings of the companies, or if you're looking into buying existing companies, this is also something that we can help with. Unia has about 450 experts in all of these countries combined in taxes, finance, legal, accounting, payroll, and IT. So whether you are looking into expanding or if you have any particular questions regarding this webinar or this topic, please do not hesitate to contact us. This is the general email address, but you can also contact each of my colleagues who are present today, and their emails were presented at the beginning. So thank you so much for your attention. We're looking forward to cooperation in the future. So if you have any questions, we are here at your disposal.
Thank you, Nina, as well. As I can see, there is just one question. They're asking about if we have a website where they can find prices. We do not. We have our website, which is unia.com, but there is no prices there. So if you wanna send you any offer, please refer to the email that Nina already mentioned, which is sales@unia.com, or any of those mails that she mentioned in the beginning, so that they can actually send you an offer. Maybe you have some specific situation. I don't know. Will be the PowerPoint slides be available? I will be sending to all people who actually requested to join our webinar. I will be sending the link to this recording of the webinar, and I'll discuss with Nina if she's willing actually to share PowerPoint presentation of this webinar. But you will have a recording. I will post everything on YouTube, and I will send the link to everybody, and the link will be on our website as well. So yeah, we'll see that. Thank you very much. Yeah, somebody raised their hand. If I saw, but yeah, Oliver, would you like to ask us? Let me just see if I can.
You can ask.
Yeah, just I need to unmute him.
Okay.
Yeah, you're unmuted now, so you can turn on your mic. Just turn on. Oliver, I unmuted you, but you need to put your
Hi.
microphone on. Yes.
Yeah, now it's
Hello.
working. Thank you. Hi, my
Hi.
name is Oliver Radosavich, a lawyer from Belgrade. Very glad to be on this web seminar and assisting and working with you and Unia. Just a few thoughts, maybe to just spray out something else in terms of what you said. So, in addition to Western Balkan opportunity, there is also a structure which is fairly operational. Yes, operational, but might be better used. It's called Western Balkans. It's seated actually in Belgrade, but covering, especially in terms of the commerce trade and things which are now very hot in terms of the transportation costs and this vehicle drivers. So this is like an association established by the EU and controlled and managed and heavily financed through the EU, which helps us significantly and very motivating openly in order to remove these kind of barriers and assist the trading and business. So I would just add, of course, beside everything said, and in terms of the tax, accounting, legal alliance, and synergies, this region, apart from the fact that it's still verbally very similar, it's, as you see, very started to be different in terms of the policy, in terms of the taxes, regimes, etc., etc. But through all these cases and association and of course consultants, you can benefit a lot. So this is my thought to add. It's called Western Balkans, and it's of course there is official website, so the whole Balkan is sitting there. So just something to add to your words. Thank you.
Thank you, Oliver. Yes, definitely. There are so many potential situations where you can use this, let's say, connections and hubs that are already established. So thank you so much for this. Yeah. Okay. Silvana, we can hear you.
Yes. Sorry, I thought I'm on. So if you don't have any more questions, I will thank Nina and all of you for joining us. And if any question comes up afterwards, you know that you can always contact us. So have a nice day, and thank you one more time for joining. Bye.
Thank you. Bye bye.